Hello friends, we are going to continue with redemption of debentures, and this is going to be our last class on redemption. And practically at the end of this lecture we'll be ending with the book 2 also, that is share capital, issue of debentures and redemption of debentures. And from the third book we have done cash flow statement. So we have almost covered the major part of your accounts, right? So let us see what we are going to study in this one. Now from the last few lectures we have been studying about redemption of debentures by conversion of debentures, right? Conversion of debentures into either shares or debentures, new debentures, right? Then we discussed at issue at par or at premium, and these debentures, these new debentures can be issued at discount also, right? So this is what we discussed. We also discussed that these debentures can be fully convertible or partly convertible. Clear? So this is all what we have discussed in the redemption of debentures by conversion of debentures into shares or new debentures, right? Now there is one small thing that we need to discuss and we'll wrap up this chapter. Now if the debentures are issued at a discount, initial issue of debentures is at discount. Original issue of debentures is at discount. Now what is the journal entry for this? What is the journal entry for this? Bank account debit to debenture application account, right? Say 90 rupees you have received, 100 rupees is the face value, 10 rupees is the discount at the time of issue of debentures. Then what is the next entry? Debenture application account debit 90 rupees, right? And to say 10% debentures, you will always take the nominal value in the debentures. Then what is this difference? This difference is discount on issue of debentures account debit. This 10 rupees is an expense for the company. It is a loss for the company, isn't it? You were to receive 100 rupees from the public, but you have received 90 rupees. You have given a discount of 10 rupees. So this 10 rupees is a loss for the company, an expense for the company. So it is debited to discount on issue of debentures. Clear? Now, when you have to redeem these debentures or redemption by conversion, when you have to redeem these debentures, what is the amount that is payable to the people from whom you have taken the money? What is the amount that is payable? If nothing is mentioned, you will pay 90 rupees or 100 rupees. Tell me that. It is given to you that you have to redeem these debentures. Then can you tell me what is the amount that is payable? Whether it is 90 rupees that you have received or 100 rupees that is the face value. At redemption, amount payable is 90 or 100. Amount payable is 100 rupees, that is the face value. Because it was your discretion to issue the debentures at a discount. the value of that debenture is 100 rupees. You have collected 90 from the public, that is your discretion. The value of the debenture remains 100 rupees. It is not that you have received 90 rupees, so value of the debenture is also 90 rupees. The value remains at 100 rupees. So if a person comes to you with a debenture valuing 100 rupees, you will pay him 100 or 90. You will pay him 100 rupees because the value is 100 rupees. Suppose you buy a notebook from a shop. The notebook is costing 100 rupees. That shop gives you a 10% discount. Right? So you have purchased a notebook for 90 rupees. Now if you are to buy that, sell that notebook further, right, you will sell it for 100 rupees. Clear? So here the face value of the debenture remains 100 rupees. So at the time of redemption, you will have to pay 100 rupees. So what is to be done to this discount on issue of debentures at the time of redemption? If you are converting the debentures into shares or the new debentures, then what is to be done with this discount on issue of debentures? There is a specific note regarding this, that as per guidelines issued, it will be assumed that discount on issue of debentures is written off in the year debentures are issued. Right? So these are the specific board guidelines. It says that you have to assume that discount on issue of debentures has been written off in the year the debentures are issued. So at the time of redemption, you will pay 100 rupees and nothing is to be done for the discount on issue of debentures. Right? Write down this note also. Therefore, at the time of redemption, amount payable to debenture holders will be face value rupees 100 and nothing to be done for discount. Nothing to be done for discount on issue of debentures. Clear? Is this clear, friends? So this was the small point that I wanted to discuss with you, that if the debentures are issued at a discount, then how to treat this discount at the time of redemption. You will just give the note that it is assumed that discount on issue of debentures has been written off in the year the debentures are issued. Right? And what will be the amount payable at the time of redemption? Amount payable will be the face value of debentures. Right? And not the discounted value. It will be the face value. Clear, friends? So friends, with this, we come to the end of redemption of debentures also, and we have completed our book 2. Right? So we have completed book 1, we have completed book 2, we have completed partnership, then company accounts. Right? So we are done with partnership, we are done with company accounts also, right? And what else beyond this we have done? We have done cash flow statement, right? So we have covered the major part of your accounts paper, right? We have covered all the important topics, all the important problems we have covered. And I'll say that if you face any problem anywhere in any question you feel, just send me the image of the question at, you can email me at ksjteaching@gmail.com, right? So you can just send me your queries, send me your questions. I will get back to you with the solutions as soon as possible, right? So we have covered the majority of your examination part, right? So that's all for this, friends. Thank you so much.